Alright, what's up, guys? I just thought I should make this quick video about oil to show you guys where the price is going. And you're going to ask me what happened to oil. I know you see it down on your screen. I know you see it down everywhere. The inventory report came out. It still showed that it was oversupplied. As you know, the floor traders are still looking optimistic towards the year end, saying demand will pick up. And I know the questions you're going to ask me is, do you buy the dip? Do you sell the dip? Are you going to trade the inverse, which is the ETF? I'm going to answer those questions later on in the video. Alright, so without further ado, let's get started to the video. Okay, as you see, this is the chart for oil. This is the weekly chart for oil. As you see, it took two huge dips that caused a lot of scare and panic in the market for those oil traders, or for those holding those long-term oil stocks that bought them around $40. They are now scratching their head wondering where this price is going to go. The inventory report showed that they're producing way too much oil. I think it was around 2 million barrels that came oversupplied. And the only bullish report was for gas, only because that there's a tropical storm coming in Honolulu, I think, and that caused gas to do almost reversal of what it did yesterday. You know, the fall of gas and the fall of oil, just basically off the dollar. Alright, so let's look at the price of oil for the week. And as you see, it took this huge dip down. This was for today. It took a huge dip down. And that as soon as they got the inventory reports, this thing went from 46 all the way to 45. I didn't know what price it was going to stop at. And from 45, it went all the way down below to 44 and 51. That was the low. And as you see, I put my price level at the low. And the price level is just that, it's just that floor for that candlestick. And that's basically all you have to do when you want to use a price level. I'm trying to make sure that you guys are, getting fed bit by bit, piece by piece, so that way when I have a video, you won't be so clueless as to what I'm talking about. So, as you see, the bottom of the candlestick, that's where you draw the price level. So it's just like the bottom of a sheet of paper. You can just draw a line at the bottom. You can draw a line with the marker at the bottom of the sheet of paper, and when you raise the sheet of paper up, there's a line on wherever you drew it at. So that's pretty much what it is. You're carving an imaginary line for these stocks that seem to hold throughout the whole stock existence, and sometimes these lines, they reset themselves, or they're new lines, but they're always going to go back to those resistance and support. Support would be the bottom line. The top line would be resistance. So oil, it bottomed out at 44.51. I thought it was going to bottom out at 44. I had it at 44.40 something, or around the 50ish. So I got the bottom almost correct, but it took off, and hopefully we're going to see it try to get back to that 45 handle. If we can get back to that 45 handle, I think we should end up positive for the week, just off of the bottom. Just off of the bottom. I'm not talking about the whole week, because the whole week oil has been at $47. I'm like, where can this price go? Because once it goes to 48, it goes back down. I've never seen it go back up to, from 47 all the way to 50. It's getting hit right back down. So pay attention to that. Also, pay attention to these small moves in oil. I know some people don't have trading software or whatever, but make sure you're paying attention to small moves, please. Alright, let's get to the funnest part, and this is trading the ETFs. Okay, UWTI is the 3 times return on the contract of oil, and a lot of people don't understand how the contract trading from the ETF works because they haven't done the research. But a lot of these ETFs, they're trading off of a contract or off of a stock. So in order to understand the ETF or that stock, you have to look back at the contract. So if oil is up 3%, UWTI will be up 9%. And you're wondering, how is this up 9%? Is this moving with oil? Yes, it is moving with oil, but it's only moving with that oil's return. It's not moving just because oil is up. It's following the pattern that oil has. Okay, now that I have a risky stock out the way, let's show you another risky stock. It's not as risky as the contract return, but Chesapeake does have some risk to it. I sold this in the early fives, but now it's taken off and it's, hitting the high sixes. I think this might go to $8. I was on record saying that this would fill the gap and go back to 7, but I sold at 5 just on seeing oil dipping around and seeing Chesapeake move, so much off of, oil being up and down. A day I was buying it at $3.97, sold it at 5.15ish, and after that I didn't pay attention to it. Now it's at $6 and above. So if you want to trade oil companies instead of trading a contract, because the contract is, it's way more riskier than just trading an oil company, because you're following that oil contract. You're not, the oil company itself can be up 10% because oil is up 1%. But if you play that oil contract, if you follow that contract, it's up 1%, you're getting a 3% return. But sometimes these energy companies, or they can be up just because oil is up, but the return matters. If you want a greater return, I suggest you play an ETF that follows the contract. But if you want to limit your return and you want to limit the loss, I guess you can find a safe oil company without volatility or with less volatility. Right now, BP, I think it trades in a range within 33.88 or 33.70 and goes back up to $34 the next day. Today I bought some at 34.88. Hopefully by Friday we can see it uptick past 34.20. That's the range it's been trading at. Actually, it's one of my long-term holds, but I decided to trade it and get rid of some oil stocks, and see if I can load up, get rid of some BP stock and load up on GE and buy BP later, since oil is dipping so much. I already know where oil is headed just by looking off the charts from previous years and previous months. Once you do your research and look back at the chart and you understand what oil is going, you understand what's going on. You follow the RSI. You're looking at your Bollinger Bands or whatever you look at to help you trade the most successfulest. I think you should be okay. Also, some oil companies to look at. Just Google oil companies, or just Google an oil company and see what you come up with, and check out the chart. If it doesn't move, like ExxonMobil, it doesn't have that much of a price reaction when oil is going down and up. Today oil went down from 47, or no, it went from 40 something all the way to 44. I just had the video up, I forgot already. But Exxon bottomed at 86 and took back off at 87. It looks like it's going to go back to 88. And oil hasn't moved that much since the bottom. So that's what I mean by you have to understand how to trade these oil companies, understand how to trade these ETFs, because they can be very risky at times, but you have to make sure that you're in before the bottom. And that's all. I'm still working on the chart analysis. New video that I'm going to have come out should be out Friday. I have a lot of stuff to do. So I'll see you guys later. Take care.